Hello, everyone, and thank you for joining YWCA Hartford Region for another exciting financial wellness series here with Liberty Bank. I want to thank my partners, community partners, who have joined us today, and they will introduce themselves. But many thanks to Glenn Davis and Pamela Days for joining us. We appreciate you both for your continued support and sorry about that, your continued support and commitment to our community. First off, I wanted to just state if anyone without doing a Google search can put or think about how old do you think Liberty Bank is? I was surprised by this fact. So if you could put that in the chat, I will have a small gift. Any staff members on, you can't participate. But if you think you know how long they've been in existence without Googling it, this is the honor system. Throw it in the chat and I will make sure that we get you a surprise in the mail. So I was definitely surprised by that. We'll see if we get any takers to interact with us. Also, we have a small poll going. I'm going to close it in like 30 seconds. If you could just quickly take that poll, and the question is, do you know your credit score? Yes or no? So just let us know. So I am Donna Shadipo. I'm the Chief Program Officer here with YWCA Hartford Region. And our goal is to continue to tackle eliminating racism and empowering women to make sure that we are creating a just and free and peaceful society for all. So it's a lofty mission. And workshops like this chip away at creating equality, creating knowledge and awareness that can help build our communities and strengthen our families. So I want to thank you all for taking your credit and your your financial wellness seriously and spending an hour with us today. So without further ado, I definitely want to just let you know the results of it. It's half of the group knows their score and half does not. So I think this is a great forum for us to dig in with some who may be savvy and some who, can use some additional support. So that's the first poll question, and I can share those results. Can you all see those results? Okay. Or no? You can. Okay, great. And I'll stop sharing those. All right. So at this time, I would love to introduce Glenn Davis. And no one put in the chat how old Liberty Bank is, but I believe it is 1875-ish.
No,
No, 25.
You don't even get the prize.
I don't get the prize.
You don't get the prize.
I did that on purpose, so you could leave.
I know,
ahead, sir.
so I can say it. Okay, well, thank you.
I have the answer.
So Donna, thank you so much for that introduction, and to all of the staff and leadership at the Y. It's our pleasure for Pam and I to present and really to partner with you in this exciting kind of financial wellness presentation in this series. And so thank you again for hosting us and having us present to your membership. And to everyone that's on the line, thank you for taking this rainy Monday morning to spend this time with us. And as we go through, I know Donna mentioned it, but again, if you have specific questions for Pam or myself, please put it in the chat and we will, try and endeavor to answer that. So I'm really pleased to have my colleague here, and teammate Pam Days-Lucatish. So we'll actually kind of tag team as we go through our presentation. And so just if I can give you a little commercial about Liberty Bank, just overall, and Donna, here's the answer. Liberty Bank next year will be celebrating its 200th birthday. So Liberty Bank was really established in 1825, and we're really the oldest and largest customer-owned mutual bank in the country. And so that's really great, and obviously we're the oldest in the state of Connecticut. But when we talk about a mutual bank, really the key to understanding mutuality is the fact that we're owned by our customers. So all of our depositors really own us, and as a community bank, we're really committed to doing the work and benefiting our community. In fact, when we go through our mission statement at Liberty Bank is really to improve the lives of our customers, teammates, and our communities for generations to come. And so we're happy to participate and to plan this financial education series with the Y, because that's really at the core of who we are, is to benefit our communities for generations to come. So, now that I have that commercial out of the way, I'd really like to kind of set the stage. And, one question that I'd like to ask, and you can put your answer in the chat, how many that are on the line, how many really like discounts or bargain shopping, like going to a store and getting something at a discount, something of quality that you don't have to pay full price for? And so, and I raised that question. So Donna, I don't know if that's a poll question or not, because I really would be interested to see how many people really would like to shop for bargains and really participate in getting discounts. And I raised that question because, okay, so yeah, so if you like that, if you could respond to that, because that really sets the stage for our conversation this morning around understanding credit and moving through credit. And then, we'll talk about that. And so, okay, so that poll question is, so Don, I guess we'll give it about 30 more seconds to see if everyone would respond, and we can see kind of some results from that. But one of the things we want to talk about this morning is we really want to talk about credit, understanding credit, the basics of credit. And Pam and I will tag team, but clearly I will turn it over to her to carry the lion's share of this. Okay, so everyone, 75% of you said that you love discounts, you love bargain shopping. Well, I'm glad to hear that. And the reason why I raised that question, because as you know, everything has a price. And the question is not how much it costs, but the question is really, how much will you have to pay for it? And I think that really sets the foundation for our understanding around credit, what credit is. And credit simply is, and Donna, we can advance that slide, but credit is really, talking about the ability to borrow money with the understanding that you have to pay it back. But more importantly, I like to think of credit as using other people's money to really advance your cause. And when I raise that question about how many of you like bargains, is because everything has a price. Individuals with poor or no credit typically will pay higher for everything. Your insurance rates are really impacted by your credit score. And obviously, what you pay for goods and services is impacted by your credit score. Where you live and how much you have to pay, if you have to pay a security deposit, is impacted by your credit score. And so that's why we really want to talk about why having a positive credit report really enables you from an overall financial standpoint, helps to empower you and helps really to build the financial stability that you need to be successful. And so, Donna, you can advance the next slide, please. And so we want to talk this morning about your credit report, and we want to do a very high level talk about what the credit report really is. It's really a record of your bill paying history. And there are ways that we'll talk about a number of things, I'm sure, but in your credit report, it's not just trade accounts like a department account, a department store account, or a credit card, but also other kind of alternative credit opportunities, your utility bills and your rent payments. And so we'll talk about those types of things. And when we look at your credit report, it really is, your credit score is really just, as I said, it's a snapshot of really how you pay your bills, the timeliness of your paying your bills, and it provides that history of how long you've been paying your bills, because that's also another factor, is how long is your credit history, how long of credit history do you have? Individuals with no credit history, and we'll talk about that later on. Pam will go into that. But if you have no credit history, we have ways that you can begin to establish that, but also ways that you can to build your credit history. And then most importantly, and this is a question that this is something we hear all the time, but everyone that's participating in this webinar, please know that you can get a free credit report annually. So once a year, you have a right. It's your right to actually to get a credit report. And we recommend that you go to www.annualcreditreport.com. That is a free credit report that you can get annually. And with that, you can get all three of the credit reporting agencies. Now, with that, it's really your credit report, and it doesn't provide your credit score. But with them, you can also pay kind of a fee to get the actual credit score. Next slide, please. And so with that, what I'd like to do is I'd like to turn it over to Pam to kind of walk us through your credit report. And as I said, we'll kind of go back and forth, but I'm putting you in some very capable hands to talk about the credit report. Pam?
Thanks, Glenn. Hi, everybody. And like Glenn said, it's really a great idea for you to check your free credit report. And when you go to annualcreditreport.com, it will ask you if you'd like a report from each of the 3 credit bureaus, but you might just want to pick one to start out with. And then you could go back at another time in the year and pull one from the other 2 bureaus if you need to. So when you get your free credit report, and why you're looking at this, because the number one thing is you want to make sure all the information on there pertains to you and it's your information. There's a lot of identity theft and fraud going on right now. And the number one way to detect it is by looking on your credit report. So, and some of the things on your report could just be common error. So the first section of your credit report is all your identifying information, and that shows your current address, your previous address, your birthday, your current employer, your previous employer. Now, if any of that information is incorrect or there's a name on there that's incorrect, you want to take note of that and you want to report it, because that could mean somebody is trying to get credit in your name, but sending the information to the address where they live or a different address. So double checking all of that. Also, a lot of mistakes get made here when you have a common last name. And there, especially if you have a family member that has a similar name as you, if you're have the same name as your mother or your cousin, their information sometimes can show up on your report. So check that out really closely. The next section on your credit report is going to show all of the places that you've borrowed money. So if you have a Visa card, it will show that. If you have a store credit card, all of those debts, if you have a car loan, will show up. Student loans will show up here. And they'll show up how if you've been paying your bill on time, that will show up. If you've missed a payment, that will show up also on this section here. And it will show how long you've had this debt. It will show you when you opened your credit card and if it's still open. If you closed it, it will show the close date. So all that information you want to double check and make sure it's yours. If it shows there's a loan for a motorcycle and you've never borrowed money to buy a motorcycle, you want to make note, and we're going to go over how you report that. The next section is public record information. And here a lot of people get confused on, and don't know that these things show up on their credit report. So this would be if you have any judgments against you. And sometimes we see things like a person went to in college, had an apartment, and something got damaged in the apartment, and the landlord brought them to small claims court, and that claim can show up on your credit report and really hurt your credit score. So you want to make sure if you owe back taxes, that will show up if there's a lien against you. If you've never paid your car taxes, that will show up under the public record information. Another thing that shows up that a lot of people don't realize and can hurt them when they're going forward to try to get, say, a mortgage down the road is if you have, say you have an account with AT&T for your cell phone and you're in a contract with them and you end up breaking that contract early and they say you now owe $200 and you are like, I don't owe $200 to them. That's crazy. I'm not paying that. You're really firm on that. And the next thing you know, you go get your account with Verizon, Switch, and down the road, you go to get a mortgage, and the loan officer says to you, you have an issue here of past debt with AT&T. What will happen is if you don't pay that $200 or resolve the issue, they'll send it to a debt collector. And anytime something goes to a debt collector, it shows up on your credit report as negative, and it will keep compounding and bring down your credit score. So you want to make sure all those little things with, say, a cable company. A lot of times we've seen this in the past. Somebody never returned a cable modem or box that they were renting, and it ends up showing up on their credit report years and years later, hurting their score. So that's why it's a good thing to check your credit report and see if you have any of these old issues on here and you can get them resolved prior to you needing to borrow money for a car, for a school, for a home. So you want to clear up any old things. Another thing that shows up a lot of times on individuals' credit report is insurance, health issues. So if you went to the hospital and you had a big bill and your health insurance didn't pay for it all, make sure you resolve that with the hospital, either set up a payment plan or dispute it, because if you don't, eventually it gets sent to a debt collector and shows up on your credit report. So I know all of these things are hard to deal with and they take a lot of time, but in the end, it really pays off. And the last thing on your credit report are inquiries. So this will show how many people are looking at your credit report. And so every time you apply for a loan, it shows up that you had that application on your credit report, and it can lower your credit score. Now, if you check your own credit report, you can do that as many times as you want, and it will not hurt your credit score. It's only when you do what's called a hard pull, and that's when when you apply for credit and they check. Okay, so we had a question in the chat. Are medical bills disallowed on your credit report? They still will show up on your credit report, but they're not weighed as heavy as they used to be. They used to really have a full weight of a delinquent bill and bring down your score, but now the weighting is not as heavy, and so it doesn't hurt your score as much, but it still can have some impact. Okay, so does anyone know what the national average credit score is or what your credit score is? Donna, that you can put up that poll now. That would be great. All right, next slide. So the poll question now is what is your credit score range? Oops, can we go back one, Donna? And
Let's see if they
um,
answer
oh,
a couple more seconds on the poll question.
okay. Do we have an answer? Oh, great.
wow.
Oh, so good. People all know their scores. Great. We have a lot of exceptionals. Awesome. All right. So the national average credit score, I don't know how many people guessed right, is 711. It's a little higher than I would have guessed. A lot of times people guess on the lower side. So that's a good score when you're looking to purchase get a loan. 711 is good. Next slide. So these are the ranges for a FICO score. So, what people don't realize is that there are lots of different types of credit scores out there. And when you log into a service online, you want to make sure that you're looking at a FICO score because FICO scores are what banks and credit unions currently are using to pull for when they're determining your eligibility for a loan. So if you're looking and you pull a Vantage score, for example, that score is going to be a little bit higher than a FICO score. So you may see that score and think, oh, great, I'm going to qualify. And then go to the bank and apply, and you're declined because your credit score isn't high enough. So you always want to look at a FICO score currently to see if you're comparing for a bank loan. So the range right here is starts at 300 and goes up to 850. In order to qualify, for example, for a mortgage to purchase a home, you have to have at least, at a bare minimum, a 620, 640, and that will get you into a bare one type of mortgage product. But the higher your score, the more products and programs you qualify for. So if you can get that score up into this higher 600s or into the 700s, you open the door to lots of other opportunities to get down payment assistance or different other grant programs that are available. So having a higher credit score can help you with lots of other things in addition to getting a loan. Like Glenn had mentioned, it will help you get a lower insurance rate. It will help you have to pay less of a security deposit. So we have another question in the chat. Is there a difference, Credit Karma and FICO score? So I don't know how many of you use Credit Karma, but when you go on to Credit Karma and get your free credit score, it's not your FICO score. So you want to be really careful when you're using other apps and programs out there because they may be misleading when you go to get your loan. So great question. Next slide, please. So, how do you get your credit score? Because, like Glenn had said, when you get your free credit report, annualcreditreport.com, it doesn't come with a credit score. And you could at that time pay to get one, or you can find it through other ways. A lot of times on credit card statements now, they will offer you a free credit score. And again, you just want to check and make sure what kind of credit score you're looking at. For example, Discover cards, they show every month your FICO score. So that's a good score, good number to compare to. You can also, a lot of times, websites, or if you do online banking, there'll be an option for you to pull a free credit score from your bank. Some nonprofit organizations will provide credit scores for you. And you also can go, if you really want to find your FICO score, you can go to myfico.com and look at the FICO Classic score. and that will be the one that's closest to what a bank would use. So that's myfico.com, and that will be a small charge to get that score. Vantage score, another type of score, again, a little bit different than the FICO score, so just be careful with that. And you can also go directly to one of the three reporting agencies, Equifax, Experian, or TransUnion, and request a FICO score from them.
Hey, Donna, can you go back to that previous? And so before leading into this next, I'd like to just ask a poll question if I can, of the audience. So everyone in the audience, will it help your credit? What do you think? Will it help your credit score to close an account that's paid in full? So yes or no, will my credit score be helped if I pay an account in full? Give you about 30 seconds, and that will actually kind of set the stage for the next part of what Pam will talk about. But I think that's will be helpful. So what do you think, everyone? No. Okay. That's correct. So it's false. Paying an account in full does not necessarily benefit your account or closing it out. So Pam will lead us into the next stage of what makes up our credit score, and that's when we can get into that.
Great. Next slide, please. Okay, so does everybody know what the number one thing is to help build your credit score or to keep your credit score high? And that is 35% paying your bills on time. So just the simple concept of paying your bill on time, every month, no matter what, is what's really going to help to build up your credit score. Now, I've been in banking a really long time. My dad was a banker. So banking's been in our family. My younger brother, says to me, "Oh, I'm going on vacation. I'm not going to work for 3 weeks. I'm not going to worry about my bills. I'll just pay them when I get back." And so, of course, I say, "Oh, your bills will be late." He said, "Oh, 1 month. 1 month isn't going to make a difference. I just don't want to bother with it. I'm on vacation." I said, "It will make a difference." He didn't believe me. And sure enough, his credit score dropped 60 points by paying 2 of his credit cards after 30 days late. So he paid them about a month and a half late, and his credit score dropped 60 points. And after a few months, it still has not gone back up to what it was. So it really, even missing 1 month, makes a huge difference. So try to always pay at least the minimum on time. Okay, the next part that really has a big influence. Oops, back one. Thanks, Donna. The next part that really has a big influence on your credit score is how much of your credit card limit you are using. So, whenever you get what's called revolving debt, which is a loan that you can use, pay off, use like a line of credit or a credit card, you have a certain limit. So, if your credit card limit is $1,000 and you charge $1,000, and so you've used the whole maximum amount, that will bring down your credit score. So you always want to charge, if you use your credit cards, which is fine, try to pay them in full every month. But even if you're leaving a balance, you never want to put more than 30% of your credit limit on your card. So using too much of your available limit hurt your credit score. And I know a lot of you are saying that doesn't make sense. The bank gave me this limit to use, and now I'm penalized for it. But that's just the way the algorithm works. If you have multiple credit cards, then the limits all add together and can help to build your score as long as you're not charging them above the 30%. So, really keeping your balance down on your cards will, or paid in full. And that's also a myth too. People think, oh, I have to leave a balance on my credit card to build credit. You don't. You can charge something and pay that bill in full so you don't get charged interest, and it will still help to build your credit. The next thing that helps make up your credit score is length of credit. And this has to do with the poll question that Glenn just asked you. So when you open up an account and you're, say you open a credit card, and if you keep it open, you don't close it, and you have it open for a couple years, the longer you have that line of credit open that you've been using responsibly helps to build your credit history. And that in turn helps to build your credit score. So you don't, when you have a card, you use it, you pay it off, you can leave it open and it will definitely help build your credit. Now, if years go down the road and you're not using that card forever and you're not making any purchases, you may choose at that time to close that account, which is fine. But just know your score might drop a little bit, but it will come back up shortly after that. Opening new accounts, that's another thing that has an impact on your score. If you're going to apply for a mortgage, we tell our mortgage potential mortgage customers, do not open any new accounts while you're in the mortgage process. Do not apply for a credit card. Do not get a car loan. Hold off until after you're approved because your score always dips a little bit after you open a new account. We had a customer once, just to tell you how sensitive it is. She was a first-time home buyer. She needed a 640 to get in her credit score to be. She was right at 640, got approved during the mortgage process. It was Christmas time and she went to Kohl's, used her Kohl's, opened a Kohl's card so she could do her Christmas shopping, charged up a bunch of things. And right before her mortgage was going to close, they verified credit score again, checked, and her score was now down to a 630. So she was almost going to lose her house because now her score wasn't high enough for her to close on her loan. So she had to go, pay that off and do a bunch of things. Luckily, she was able to get everything changed and done so that her score was up high enough to close on the loan. But just telling you how sensitive things are. So if you're going to be making a big purchase that you need to finance, do not open any new accounts prior to that. Wait till, after everything's closed.
Hey, Pam.
Yes.
So having said that, so is it a timing issue? I mean, how does someone plan? I see if they're buying a house, I guess what you're saying is that when they're trying to buy a house, they're trying to get pre-qualified or pre-approved, and their credit score is run at that point. And so what I hear you saying also is that even if they get pre-approved at, let's say, 640 or 650, their credit score is going to be run a second time before they're able to close?
Correct.
Oh,
yes.
okay.
Right. Great point, Glenn. So you really want to be careful. Once you get pre-approved, that's great, but you have to be very careful. It doesn't mean that now you can go out and purchase a bunch of things, charge up your credit cards, because that could impact your score. So you want to be very careful until the actual closing.
And we
Another
also
thing-
had one other question in the chat.
Oh,
So what's
sure.
an algorithm and what does that have to do with me?
So when people think of their credit, they say, how does a credit score get calculated or figured out? And all the credit scores is a mathematical equation or algorithm, and it looks at all different factors and gives them a certain percentage weight and then comes up with a number. So credit scores don't really look at individuals. They don't know if you're a girl or a boy. They don't know your age. They know nothing about you except just your spending habits, and looks at all those numbers and comes up with a credit score. So that's what they're talking about when they say algorithm. And that's why when we say there's different credit scores out there, they're just different equations that weigh things have a little bit heavier or less. So the Vantage score might take a bigger percentage of paying your bills on time, might be in that algorithm, which makes your score a little bit higher. Or maybe they have a bigger weight on the length of credit history. But they're all designed a little bit differently, and that's why you have different numbers. Different weights are put on different categories. And the last thing that makes up your credit score is your mix of credit. So, what they mean by that are there are different types of credit. There's installment loans, which would be a credit builder loan where you have a monthly payment of a certain dollar amount, or a car loan. You know, every month your car loan is $400, and after 3 years, it will be paid in full. There's also revolving debt, which are your credit cards or your lines of credits, home equity loans, where the balance on those loans adjusts every month. It can be down to zero or it can be charged up to the max. So, those different types of credit, a mortgage loan is another secured by a property. All those different types of loans, a variety of them, weigh into give you your credit score. So your scores actually can be a little bit higher if you have a mix. So if you just have all credit cards, it may be lower than the person who has a student loan and a credit card. Okay, next slide, please. So now we want to talk about some ways to build your credit. Making your loan payments on time is very essential, what we talked about. And then having, if you have no credit history at all, you could get what's called, you might try to apply for an unsecured card, which would mean you just go, you fill out an application for a Visa, MasterCard, Discover. That would be an unsecured card. Sometimes you might get approved for that, and that will help to build your credit. If you have that and use it a little bit each month, pay it in full, that's going to build your credit. If you do not get approved for that, because it might say lack of credit history, we can't approve this credit card application, then you can get what's called a secured loan. And a secured credit card would be where you'd go to your bank or apply online, and you would put money up front. So, say you give $500, it's put in an account for you, and you get a credit card with a $500 limit. You can charge up to the $500, pay it back, keep going back and forth, and it will start to build your credit. Meanwhile, the money that you gave the bank is in an account earning interest, and this helps you to build your credit. And after a few months, 6 months or so of doing that, probably your chances of getting an unsecured or regular credit card are much greater. The other thing you can do is get what's called a credit builder loan. So those are loans which are often called secured loans. And there's money put aside in a savings account, and you're given a loan and given a monthly dollar amount, an installment to pay every single month. It's reported to the credit bureaus, and that then builds your credit as a different type of loan, an installment loan. So at Liberty Bank, we have what's called the credit builder loan, saver loan. And how that works is you just go and you open a loan for a year. You also, at the same time, get a CD or certificate of deposit for a year. And as you're making your loan payment, say it's $100 a month, that $100 goes into your certificate. So you're saving money. We report the $100 as an installment loan. and it looks like you're making monthly payments to Liberty Bank, to the credit bureau, and it will show up on your credit report as a Liberty Bank loan. It's building your credit, and at the same time, you're saving money. At the end of the year, the loan's considered paid in full, and you have now money in your $1,200 in your certificate along with interest. And so you're building credit and saving at the same time. So great products called Credit Builder loans. So looking for one of those can really help build your credit. Keeping a low balance on your credit cards, which we talked about, avoiding getting close to your credit limit, reporting any errors on your report, and working with collection agencies. If you have someone calling you that you're behind on a bill, or you haven't paid a bill, or you have a debt due, not just ignoring it, really talking, finding out what it is, thinking of ways to pay it down, working with nonprofit agencies that have free assistance to help you pay high credit issues that you may have on your account is really important to do and can really help build your credit. And then looking and making sure you have a good mix of credit, like we talked about, installment, revolving loans. So once you have your credit started building up, or you have good credit, you just want to always keep track to maintain your good credit and paying your bills on time as agreed, paying down debt if you can. Don't apply for too much credit. A lot of times we get great offers. You'll go to the store and they'll say, oh, if you open up a credit card with us, we'll take 30% off of your purchase. Thinking twice about doing that. You might get 30% off, but that's going to be a hit on your credit report, opening another debt for you. Is it worth the trade-off? And a lot of times it's not. So really be careful about opening new credit and debt, especially if you go to someplace like a Home Depot or a Lowe's and they have credit. If you're going to make a big purchase, they say, purchase this, no interest for 24 months, and you can get a new washer and dryer. But that no interest only pertains if you pay off the washer and dryer in the 24 months. If you don't, a lot of times fees happen or all the interest is credited back to your account, and the interest rate is normally really high. So be very, very careful when you're opening new credit. And remember, I think Glenn said this in the beginning, if it sounds too good to be true, it probably is. We all like bargains or good deals, but a lot of times they come at a cost. So be really careful of all of those things. Paying taxes, child support, all of those things on time will impact your credit. A lot of times we think those type of bills aren't really associated with our credit, but they are. Disputing any errors that you have, and keeping good financial records in case you do have to dispute something. So if you're charged an error for something, when your statement comes in, reporting it right away, keeping a copy of that statement will really help clear off your credit report and not cause you problems going forward or lower your credit score. We have time now for some questions. Donna, are there any questions?
We have one poll we're going to launch now. And if you could answer that, that would be fantastic. So we want to know, based off of this workshop, what actions will you take? Will you look at your bill statements and when your bills are due and attempt to pay your bills on time? Get a credit report so you know where you stand. Review your credit report to see if there are any items that maybe you can, work on or get removed. Or this conversation was just really great and you already have a strong financial wellness kind of habits, and you can check that box and you joined us today for reinforcement. So if you could take our quick poll, and then if you have any questions that weren't answered, please put those in the chat. And they won't show in the recording. So you'll be able to either send them to me directly, and we can get those addressed for you. We're almost done. Some good stuff happening. Good. 25 seconds. Any last burning? Okay, and let's share the results. So it looks like folks are going to get their credit report, which was great. That was an accomplishment for today. So we are excited. That's our goal. So knowledge is power, and understanding and awareness in terms of where you are is key. And some are looking, 60%. They're checking out their credit report and learn possibly some tips from both of you today in terms of what to look for. So thank you. And 20%, we got a strong fiscal wellness person on the call, which is great. And so a part of that journey is to continue learning about the process, and you can never learn enough. And so thank you for joining us today too. So that's great. So Pam and Glenn, anything from that you want to add?
I just wanted to say, if you get your free credit report, you have questions, you have things that you don't understand, or things that need to be fixed, don't feel like you can't ask somebody. A lot of times, we might feel embarrassed if something's on there or afraid, but definitely asking and getting help, because a lot of these issues are confusing and maybe only happen occasionally.